Hi, welcome back to my channel. Today I want to talk about a question I'm asked all the time. What is better, conventional or FHA? So here's the difference between the two. And honestly, the answer to what's better is dependent on your specific situation altogether. So here's the difference. So FHA is not credit score driven. So let's say you have like a 600 or a 620 FICO score. FHA is going to give you the same rate as if you had like a 720 FICO score. Conventional is very credit score driven. So if you have a 720 FICO score, you're going to get the best rate. Anything lower than that, they're going to bump your interest rate up. So your interest rate's going to be higher. Like say you're down to a 620, you're going to have a much higher interest rate than you would FHA. Plus the mortgage insurance is going to be higher on conventional because that's credit score driven too. So a lot of times if I pull credit and I see that the credit scores are a little bit lower, you know, everybody's had their problems at some point in time, then we'll look at FHA and we'll compare the two, FHA and conventional. And honestly, you'll say, oh, I'll take FHA because the rates are so good and it doesn't matter what the FICO scores are. But if you have really high credit scores, so say you have over 720, conventional is going to be the best route because you're going to get lower mortgage insurance and a low interest rate. So your payment's going to be lower on the conventional. So it kind of just depends on your credit situation. The other difference between the two is what's called debt to income ratios. So debt to income ratios is taking your income that you have and dividing it by your debts. And your debts include the new house payment that you're going to be getting too. So on the FHA loan, you have a lot of flexibility with that, which means that they'll go higher on debt to income ratio. So if you need to get in a little higher house, then it works better FHA. Conventional keeps theirs a little bit lower. So FHA's can go up to 55%. Sometimes you can stretch it higher than that depending on how your overall file looks. And then conventional is at 45%. Sometimes you can stretch it to 50% depending on your overall file. So if we need to stretch debt to income ratio, then a lot of times I'll look at FHA. So again, it just depends on your individual situation. Another difference between the two is, let's say that you're just getting started and you don't have a lot of credit. FHA doesn't really matter how long you've had your credit. So like if you've had a card for 6 months, a credit card for 6 months, you're going to show credit scores on your credit report. FHA, you're fine with that. Conventional, a lot of times they want to show that you have more lines, meaning like more credit cards, car payments. Everything that you have on your credit is called a trade line. So they want to see a minimum of 3 trade lines. So one could be a car, one could be a student loan, one could be a credit card, or just as long as you have 3 in one of those categories, then you could do conventional. So a lot of times if your credit's struggling because you just pay cash for most of your stuff and you don't use your credit a whole lot, FHA might be the better route to go. So again, that's just a matter of looking at your file individually and seeing what works best for you. One is really not better than the other. They're just better for one person or the other. So it's hard for me to say, oh, go FHA, it's better, or go conventional, it's better. It really depends on your individual situation. The other thing that's looked at is down payment. So if you have 20% down, you're definitely going to not want to do anything but conventional, because conventional, once you have 20% down payment, then you don't have mortgage insurance on it. So it saves you a lot on your payment that way. FHA, it doesn't matter what you put down. You could put 20% down, you could put 50% down. You're still going to have mortgage insurance because that's just how the program works. FHA is more driven towards like helping, kind of first-time home buyers or people getting into their house. So you could put a lot less down on an FHA loan. Their down payment is 3.5%. And if you put the 3.5% down, you're not going to have to pay a higher interest rate or anything like that for the down payment. That's like their minimum down, and the rate's still the same depending on, like everything that we're looking at. And then conventional, they have a minimum of 3% down, but you take a little higher rate for that. And then if you go to 5%, 10%, 15%, then that changes the mortgage insurance. So you could choose between the two depending on your situation and how much down payment that you have. So we're basically gonna just look into all of those factors to see what's best for you. And when you call me, I'll just kind of go over all the programs for you so that we can say, okay, here's your payment here, here's your payment here, and here's the down payment. And that way you can make a decision based off of what you have in the bank, based off of your credit scores, and everything that has to do with you as an individual. Anyway, I hope this was informational for you. If you have any questions, I'm going to leave my phone number right on the screen for you. Call me anytime, or you can put a comment below. But please like and subscribe, and thank you so much for watching.